Are you already approved for a mortgage, but you need more buying power? Did they give you a loan amount, but it's just like not enough to get the house that you want? You want a better house or a better neighborhood, or you just need a little bit more than what they gave you? Well, I've been in that same situation, and I used to work in the mortgage industry. So I'm gonna tell you some very, very important secrets. Let's go. Okay, so we're talking about buying a home and the mortgage process. So when we're talking about getting approved for a higher loan amount, essentially you're trying to buy more home. In many cases, when you go to your mortgage company, you get what's called a pre-approval or pre-qualification. They will look at your income and your credit, and based on basically those two things, those usually are what determines what the loan amount that they're going to approve you for. The mortgage lender initially looked at your credit report and they added up all of the debts on your credit report, okay? Those are your liabilities. And then they looked at your income. They looked at how much money you were making per week, per bi-weekly, per month, and they came up with what was called your gross monthly income. Then they did a calculation where they divided your debts with the new proposed mortgage, okay? So again, they kind of estimate what your mortgage payment will be, what the taxes and the insurance will be. They do an estimate, and then they add to that estimate, the new proposed payment, all of the debts that you already have, and then they divide it by the amount of gross monthly income you have. And you have to have about 40% debt ratio, okay, on average. So about half of what you make should still be available on your gross income. And that is what they base their decision on. And they tell you, go ahead and shop for a house because this is how much they think that you can afford. Now, if you are in a situation where you feel like you can afford more, let's talk about how we get there. So like I said, I'm going to tell you the 5 ways, and I'm going to start with the most difficult to the easiest. The number one way to do it, and this is the hardest way though, is to raise your credit score. Now, depending on who you are and what your credit situation is, this may not be very difficult for you. This could be as easy as paying off some of your credit cards or taking your name off of some authorized user accounts that you're on. So what you can do in many cases is get some of those items removed or take off accounts that you are not on, you're just an authorized user on. So most of the time when you got approved for your mortgage, okay, and they pre-approved you, and again, using our example, they said $200,000. They base that off of what your credit score is right now. And so if you want to get a higher loan amount, you can literally start working on your credit. You can say, okay, you know what? I'm not buying a house right now because I need to get my credit score up, and I'm going to go back and do this process again. And so you can raise your credit score and then reapply with maybe a different lender if the credit has expired, because you can't just do this in 10 days or things like that unless you do it with the same lender. If you want to get more home and you're like, I can get my credit score up, go ahead and do that. You can actually cancel the application, or you can wait. We'll work on your credit, get your credit score up, and then reapply. And in many cases, you can get approved for a higher loan amount, because in many cases, what will happen is you will then qualify for more things. There's tons of different things that is available to you if you have a higher credit score. Number 2, and again, we're getting a little bit easier here. You can get what's called an ARM. It stands for Adjustable Rate Mortgage. When you get a mortgage loan, you can have either a fixed rate, that's the rate for the duration of the entire mortgage. So right now rates are super low, and we expect that they're going to be for a long time. They've actually been historically low for the past 10 years, and now they're even lower. So if you can get an ARM, in many cases, the rate will be even lower, okay? And then you can qualify for more home. There is a warning I want to give you, because it is an ARM, meaning it does adjust after the fixed period. With a fixed rate mortgage, for the whole 30-year mortgage, the rate is the same. So if you get a 4%, it's 4% for the whole 30 years. But if you get an ARM, it may be 1% or 2% for 3 years or 5 years or 7 years. And then it will start to adjust. So it is in many cases still fixed for a certain amount of time. And again, you will know exactly how long it is fixed, and then it will start to adjust. But again, this is a simple solution to get more mortgage loans. So if you want to get a higher loan amount approved, you can ask your lender for an ARM, and in many cases, the rate is lower, so you can get approved for more money. Number 3, Adding a co-borrower. I know people are like, wait, I don't have a co-borrower. I don't want a roommate. I don't want a person living with me. Well, you do not have to have a person that lives with you to be a co-borrower on your mortgage in many cases. In fact, I'm going to share a secret. I actually even have my certification to underwrite federal loans, okay? And this is super secret, certification that very few mortgage underwriters have. I actually have mine, so I can even underwrite FHA loans and VA loans and things like that. So I'm telling you really honestly that adding a non-occupant co-borrower, again, someone that doesn't live in the home, is a possibility on most loans. And this will increase your buying power because they will add in that person's income. So if you have someone that has decent credit, a mom, a dad, an aunt, an uncle, things like that, someone that you trust, you can ask around. In many cases, you can even work out a deal with them where they're on the title. If you feel like, you want to give them some skin in the game where they have some ownership in the property, you can even add them to the title of the property and they can be on the title of your home as well till you get your situation fixed, and that way you can get more property. Number 4, have compensating factors. And that is a factor that gives you compensation to go higher on your debt ratio. And like I said, most lenders are looking for around 40% as your debt ratio. If you have compensating factors, meaning you have been on your job a long time, or you can provide rental checks to show that you pay your rent on time and you want to actually document that, and they will let you go to a higher debt ratio with these compensating factors. So look and see and talk with your loan officer about what compensating factors that you could use. And here's the thing, I'm telling you, a lot of the loan officers do not even know about asking about compensating factors or going and petitioning with the underwriter to give you a higher debt ratio based on compensating factors. So now you know something even loan officers don't know. Use that to your advantage. Number 5. You can actually put more money down, okay? So if you want to get approved for a bigger loan, you literally can just put down the difference. In many cases, if you put down more money, they will actually increase the size of the loan that they will give you. So I'm not saying that if they give you $200,000 and you want $300,000 that you have to come with the whole $100,000. In many cases, if you put down $10,000 or $20,000 more, they will give you $90,000 or $80,000 more on your loan amount, okay? So this is an awesome way to get a higher loan amount just by putting a little bit more money down. So what you want to do if you are wanting a higher loan amount is you can shop lenders. If you feel like you can get a higher loan and you feel like you are able to pay for it and you can afford more, and the lender that you are currently working with is not budging, then you can shop for other lenders. Do not let them tell you that it's going to ruin your credit or that all of this other stuff is going to happen, because that's not true. If you are wanting different terms, better terms, higher loan amounts, lower interest rates, things like that, yes, you can call around and shop at other lenders, especially if you already have your situation and you know what your credit score is. You have a lot of power. Now, yes, most of your big banks, if you were going to get approved at Bank of America and then you said, oh, I'm going to see what Wells Fargo has. Well, in that case, they probably are very similar because they are both big banks. However, if you were wanting another situation, you can check out mortgage brokers, you can check out mortgage bankers, and yes, there is a difference between bigger banks, especially if maybe you are living in an economic area that they need to lend money in, or you are going to buy a property in an area that they need to lend money in because of economic redevelopment. There's tons of programs out there that are not advertised, so shop. So another thing that you can do if you want to get a higher loan amount is you can pay off debt. So installment loans, not student loans, but installment loans that have less than 10 payments are usually excluded from your debt ratio. So what you can do in many cases is make sure they're already paid off before you apply, or if you need a higher loan amount, you can pay those debts off. If you have less than 10 payments on an installment loan, those debts can be excluded, and in many cases, you can pay those debts down. You don't even have to pay them off. So I would love to meet you guys in person and teach you for 3 full days. If you are liking my training, if you love my YouTube channel as much as I love you guys and you want full training, I am offering 3-day trainings where you are with me all day, small group. I show you my properties, you get a workbook, you leave my training with a full plan on what to do and how to start making money investing in real estate. I have students that are making six figures in a matter of months, and I even now have students that have crossed over to the seven-figure wealth formula where they now are a certified millionaire. So if this is something that you are wanting to do and you want to learn, please go to growyourwealthevent.com and check out our events, grab your tickets. I would love to see you guys in person. I would love to meet you at the events and teach you and train you fully with me. This is Noelle, to your success.